Welcome to another episode of Java with Josh. Today's special guest is my good friend Sam DiPiano with Haus Capital, based here in Buffalo and in Rochester. So, Sam, tell me a little bit about how you got into the mortgage industry. You do both residential and commercial now.
Yep.
So, tell me a little bit more about how you got into the industry.
I started in 2000 actually in the residential mortgage industry. Kind of just fell into the business. Made a career change. Was doing something totally different. I think any loan officer you talk to in the industry, nobody plans to be in the mortgage industry and in real estate. I think you just kind of somehow you find your way into it. Everybody has a story, I'm sure, of how they ended up working where they work and doing what they do. But it's been great. It's been a very good business for myself. I made a very good living and a ton of flexibility. And I definitely enjoy what I do. And to be in this business and be in this industry, you have to enjoy it. Either it's not a 9 to 5 job; it's a full-time job. And
Definitely not a 9 to 5.
it's not just a. I look at it not really being. We're in sales, but it's not really a sales job. We're more or less educating people how to get to where they're going. And it's not, business has changed a lot over the years, and it's certainly not a cut and dry, situation where, if somebody's got great credit, the steady job for the last 10, 15, 20 years, steady salary, yeah, sure, those are easy customers to finance. They can get a mortgage any mortgage bank, any bank in town. But it's usually the ones that have, where life happens to, or different situations where that's where the real skill comes into play as a mortgage person.
Yeah. So what I like to do is focus on a lot of people that are trying to get their start in commercial real estate. So what are some of the programs, specifically on the commercial side, what are some of the different loan products that you have within Haus Capital that might be of interest to a startup business, or perhaps more established business that's looking to buy their own space?
Sure. And it's great. we've, as a company and as a loan officer, as a salesperson, I've had to pivot to doing more of a product mix of my business. And that's one of the benefits of being a mortgage broker. I'm obviously a broker. I'm a big advocate for, the industry, for people to work with a wholesale mortgage broker. If I sold real estate, I don't want to work with a broker because I know, you never know what kind of customer you're going to get until you talk to them and kind of dive in and figure out what they've been through in their life or their business. And as a real estate agent, I don't want to be able to accommodate, I'm out there selling, networking, trying to build my business. So I'd want to make sure that, hey, as a realtor, I can get paid for my efforts. I'm going to be able to, get paid for my time, obviously, but also meet my customers' needs, build those referrals. And, nothing against any of the banks or mortgage lenders in town that are out there. They're all, there's a lot of, great companies out there, of course, that do what I do, but there's guidelines and they're stuck. They can only do certain things. If you work for a mortgage bank, or you work for a independent, one of the big brick and mortar banks, they have certain products, certain guidelines they follow, and that's it. That's going to be whatever whatever they're trying to sell or whatever they're trying to promote, and usually they're risk adverse, so they don't want to do anything a whole lot outside of the box. And in today's economy, today's society, there's a lot of out of the box things happening in life because the cost of living is so high. Everybody's watching the news and see what's going on with the tariffs, driving up prices, groceries. Everybody's, tightening up their wallets right now, what they're spending, because the average person, and the average business is trying to make sure they make it to the other side of these, turbulent times. So as a broker, we have many options. Right now, that's been a very good mix to what we have is, the investors looking to buy commercial properties, residential, everybody's heard of DSCR loan financing, and also normal straight. I just picked up a client right now. They're buying a residential house here, and he's also a prominent dentist. He owns a $2 million strip plaza in Texas, and we're able to, we have homes for those types of mortgages, So, and we've done a lot locally and also outside of New York State that we're able to meet those needs because there's different laws and different licensing for residential financing and commercial financing. So it just depends on, what type of situation we're looking at.
So I'm going to break down a piece of lingo that you just used, DSCR. Can you explain what that means for any of the viewers that aren't as familiar with some of the industry jargon?
Sure, those are for investment property purchase only, and we have lenders that'll do from 1 unit up to 10 units. They have to be more than 50% residential. So, for example, we have a lot of straight, just 8, 10 unit apartment buildings that we can do. I'm refinancing right now a property on Bailey Avenue. Customer rehabilitated the building, has 3 beautiful new apartments and a barber shop. So, but there's more than 50% residential application. So there's a lot of, we can go on, there's a lot of mixes like that around. But to answer your question, so we're able to give the mortgage based on the client's credit score. Typically, you want to see a 680 or higher. We want to see some liquidity and that they have some reserves, depending on how much real estate they own. The reserve requirement could change if they own, 1 property, they own 10 properties, and what their cash situation looks like. And there's no income verification, so that works a lot for people that are self-employed. Works a lot for flippers. It looks a lot for real estate people that, between depreciation expenses, their tax returns aren't showing, flush, to your history of positive cash, of positive earnings, I should say, not just cash flow, but earnings, bottom line earnings of their business and what they're doing. So if the property cash flows, right? So if basically, depending what percentage is, we're at least looking for a 1%, which is the property just covering the mortgage payment out of the any appraisal we'll do what's called a 1007, which will be a comparative rent schedule. So we'll look at comparative rents for that subject property. Other like properties, if it's other cash flow rentals of like 3 units or like mixed use properties, or it's got to be within reason of what that property is. And they've been popular. I mean, we're doing a ton of business. Myself personally, I like them because I build, relationships with customers that are going to be long-term clients. I mean, my investor clients have been a great part of our business. I have a client closing on 4 loans on Friday. I just did 3 loans for him. Now I'm doing his partner's loans, which are several houses, leading me to other business partners they have in Florida, because we're licensed in Florida. We can do business in Florida. And it's just, they're loyal. They just want good customer service. They want good rates and good products. And like anybody in business, time is money. So they just want people that can perform and get the job done for them quickly and efficiently. And we can. So the DSCRs are, and for me, I like it. Not a lot of banks do them. Mm-hmm. So a lot of the big brick and mortar banks don't do those loans. So, working with a wholesale mortgage broker is a good outlet for any of those folks to look at for business. Of course, I want them all to come to me, but but any wholesale mortgage broker has those options out there for themselves.
So there is a lot of different types of loan once you leave the pure residential single family world behind and you start getting into investment properties, mixed use properties, commercial only properties. There's a lot of different types of loans. Are there some cases where a bank might be best suited versus some of the loan products that you offer, depending on the client's needs? Is there a time when a bank is the most appropriate, depending on, does it matter? Is there loan limit sizes?
Well, yeah, I mean, I have a client, there's a couple local banks here in Buffalo that are, smaller savings and loan type banks where they'll have a limit. Even a lot of banks will have a max lending limit for a customer. So if you own a lot of properties, again, I don't know what those limits are per bank, but usually there's a cap because if you think about it, they don't want to have that much risk out there to one customer. So if something does happen to that client, if they do go bad, they want to limit their exposure if something happens, to that business or that customer in their portfolio. But typically they're going to be protected because they're going to be in a pretty good equity position. So, but there is limits, which is nice. So, and I work with a lot of those, local savings and loan banks. I work with credit unions. I work with national banks. I have 2 very large credit unions that we do a lot of business with across the state. One of the credit unions I work with will go across the country. So it's kind of nice depending on what you can do. But as a real estate salesperson, I consider myself to be a real estate salesperson. I sell mortgages, but I'm in the real estate business. That's our job. That's our livelihood. And it's nice as a salesperson to have diversified my business, because we all know as professionals how difficult the existing real estate market is. I mean, you think about it, even as an agent, I want buyers, but for you as a realtor, you want more listings. It's easier for you to sell listings than it is to deal with buyers right now.
Depends on the day.
Yeah,
Depends how many phone calls I've had that day.
Yeah, that's just the reality. And there's all these cash guarantees, and all the offers are crazy. In Buffalo, Rochester, we are in Saratoga too. In all of our markets that we're in, that we service in New York, it's multiple offers, and a lot of buyers are saying, you know what, I don't want to do a cash guarantee. I don't want to overpay for a house. I'm going to let it go past delayed negotiations right now. If it's meant to be, it's meant to be. I'm going to see if the house is available. A lot of folks are, buyers are becoming more picky. They don't want to overpay for these houses, and that's what's happening. So it's nice as a professional to have that diversification in my business. Sure, residential is my bread and butter. I work with, with yourself and other, good agents, loyal agents that, want to do business with us, and they like how we operate and like our customer service. Like me, obviously. But it's nice to have those options as a salesperson to supplement your income. Why not, do the mixed-use properties? Why not do the light commercial properties? I have another agent I work with. He's over at Metro Roberts, a good guy I work with, and does the same thing, same business philosophy. He does residential, commercial, kind of does it all, and it fills the gap. And you have to make money.
Western New York is a pretty small market.
Yeah.
There's other cities where you can say, oh, I just do Class A office and 30-story buildings. We ain't that. We aren't there.
No, but as a salesperson, that's, great for your business, obviously, because we're all, you're selling real estate to make money. I'm selling mortgages to make money. That's how we provide for our family and pay our bills, of course. But for me, just, for example, I won't leave names out of it. I had and this is where the benefit comes in working with a broker. There's a lot of, I had one business, right? They had a customer, been in business for a few years, had issues with their bookkeeping, was not keeping really good records, but they had great cash flow. And the rate wasn't great, but they were expanding. They bought a warehouse here over on Genesee Road in Buffalo, and they needed to expand their business, $130,000 deal. We had a home for them, 30% down. The rate wasn't the best, but I have a lender that just doesn't really care about the business of the customer. They care about the real estate. Is there value there? Are they going to pay? And for the business owner, it's great. Sure, of course, if they had great credit, if they had strong financials, if they had, 2 years of showing really good income, and that's always a battle with business owners, is the more income you show, the more taxes you're paying. And, to do a full doc loan for the best interest rate, like anything, you have to show good income, which means you're paying top dollar, 40, 50% tax rate between federal and state, depending on what that level is of taxes that you're paying here in New York. So not a lot of folks do that. They show minimal income, and we could add back in depreciation. There's certain expenses that they may pay for in their business that we can back out on the commercial side. but it's still kind of the same philosophy. But, there's a lot of business out there, from, I just closed on a strip plaza in Grand Island. We just closed on another 4-unit property was a bar restaurant. Customers making a bar restaurant at 3 apartments, but $500,000 deal, so it was a nice sale, nice commission for myself, good commission for the real estate agent.
Mm-hmm.
And the buyer was tickled pink because we had an option for him because nobody else had options for him. He owned a food truck, and he was pivoting from the food truck business to more of a soul food restaurant business, let's say, right?
A more brick and mortar location.
Yeah. Another customer that, I had just closed in Rochester. Same thing, great guy, great customer, owns a bunch of properties, but he opened up, bought a property cash, rehabbed it, opened up a new business. He was starting in Rochester. Great building, but same thing. It wasn't bankable because he didn't have the financials to show the experience. Well, we had an outlet for him, another $500,000 deal, 70% loan to value. He has good credit. He had money saved. Very good customer. We were able to get that done. And he was happy because he was able to take that money out of that property and business, to help keep him liquid for the business that he's starting. But guess what? He's going to buy more real estate.
Mm-hmm.
So we just help people keep moving money around, and they keep building their portfolios. And that's good for, it's good for the economy. It's good for, repeat business for mortgage people. And for the realtor, it's good for business for the realtor. Because if you're happy with those clients and they have good service, guess what? They just want a team. They want a process. They don't want to shop around for a new real estate agent. They don't want to shop around for a new mortgage person or a new attorney. They usually have, hey, this is the system. It works. It's just, it's not broke. Don't fix it.
So there's a lot of different business models when we're talking to small business owners. Some of them like just renting a space. It works well for them. The location works great, and it fits within their model of what they want to do. And there's other business owners like the food truck owner that was looking for a more brick and mortar location. What specifically do mortgage brokers really like to see to make that help those business owners make that step from where they are to where they want to be in terms of an ownership perspective, ownership of real estate?
It depends on their business model, depends on what their needs are. I mean, the business, and I have, funny, I have a client of mine who just went to contract on a house in Rochester, and she works for M&T Bank, remain nameless. But she gets to work from home now. She's in the banking industry, and I'm doing her loan because we have a better product and a better rate for her. And she looked outside, and she has been looking probably since last summer. Same story, getting beat. Don't want to overpay. So she said, you know what? I homeschool my kids. I got to go to the bank maybe once a week to go to the office. I pretty much work from home now remotely. Mm-hmm. She bought a house out in Albion, outside of the outskirts of Rochester. She's like, you know what? I'm sick of competing. I'm going to get some land. I'm going to get a bigger house. Who cares? It's out in the middle of nowhere, but I homeschool my kids, and I work from home pretty much. Mm-hmm. And that trend is starting to really happen. And she was smart. She got more house for her money, and it wasn't, overpaying for a house. Where in the immediate metro areas of Buffalo, Rochester, if you have 20 offers on a house, guess what? It's going to go for probably $100,000 over asking price.
Potentially, yeah.
Whatever. If they're paying cash guarantee, mortgage, doesn't matter what means they're paying for the property, but they're overpaying for the house, and people are sick of doing that. So the business climate has changed, even in our business in real estate. We were just talking about that earlier, right? I mean, I have mortgage offices because New York State tells me I have to. I have to have licensed locations to do our business. But the world has changed, and especially in bigger cities. I'm one of the top brokers in the country with the largest bank that we work with. So I'm going to broker roundtable meetings a couple times a year just to brainstorm, network, have mastermind groups. And, I'm one of the guys that are from the small city here, right? In Buffalo, I mean, we're small potatoes. But, out west, out in California, Colorado, Florida, the larger states, everybody works from home.
Mm-hmm.
They don't go to the office at all. You think about it, just because it saves them the drive time.
Mm-hmm.
I was talking to one of my account executives for a bank I work with out in California, and it was last week. And I've been traveling to Buffalo a lot with my mom being sick. I'm here very often, and we're doing something. I said, listen, I gotta drive back to Rochester. I said, I'll give you a call later on tonight when I get home after I have dinner and see my wife and see my daughter. And I'll give you a call. And she goes, well, how far is it from Buffalo to Rochester? I said, it's about 75 miles. Takes about an hour and 20 minutes, depending how fast you drive, and if there's traffic or any issues to get to and from. She goes, wow. She goes, I drive an hour and a half, and I'm 7 miles away from my office in California. That's just reality. And that's, obviously for the large cities, Buffalo, Rochester are relatively small. You can get anywhere in an hour and a half, depending on, if you're going to Lockport to Hamburg or going to Rochester to Buffalo, whatever, Batavia.
My house to downtown Buffalo, 25 minutes door to door.
Right.
It used to take me that long to get to the grocery store.
Mm-hmm. Biggest thing is snow. If we have a snowstorm or there's snow, it can be a little bit longer. But, we're spoiled living in Western New York because of that. But in large cities, it's become a problem. So, I think, I owned a commercial building in Rochester, which I sold last year, and I'm renting, relatively smaller space from Ellicott Development here in Buffalo, the Ellicott Square building.
Mm-hmm.
And I'm in Rochester at a historic building in the city of Rochester. I like being downtown in my cities just to be neutral, depending on which if you do have to meet with the customer, which is very rare. Just funny how it's changed because, I used to know every client I did a mortgage for. I'd see him at Target, see him at Wegmans, see them in grocery stores back when you used to meet everybody face to face. Now, everything's done by an app.
Yeah.
I literally, you send me a new customer. I said, I'll call them, talk about their scenario. I'll text them. Even having old-fashioned business cards are a thing of the past. My business cards are all electronic now. I'll just text somebody my electronic business card. They can save my contact information. And, I do it to save time, but also to make sure I spell your name correctly, your email correctly, your social security number is right. Nothing is if I'm having a day of dyslexia, I don't mistranspose their date of birth or their social, or they do it themselves. And, now they can upload all their documents on a phone. I send them my app. They take a picture of their pay stub or W-2, it just uploads to my system. And people love that because it's time. It saves them time they don't want to see me. They just want to know it's getting taken care of. We e-sign out their documents. They want to sign them. Some people that are very cautious would rather meet face-to-face. There's definitely, and again, we have offices for that reason. And we have offices to meet our customers face-to-face. Or if they want to have a client today who's going to contract, who's stopping in my Buffalo office to drop off his documents. A younger guy, actually, but he's not technology-driven. So he goes, do you mind if I stop? I said, no, Melissa's in the office today. Right ahead. I won't be there because I'm here, obviously, but, she's there working, and you can drop off your documents. We're older clientele, our parents' age, or we're close to age to each other, you and I. My mom's not technology savvy. She can barely use a cell phone. So, older clients will want to drop off their documents and, meet face-to-face. But, it's just, I think commercial real estate is better for a business that needs a space and that has a use for the space. Even now, we were saying, you go to any real estate office, they're empty. People are there for touchdown. If they have to, meet a customer, drop off paperwork, pick up a check.
They're not there 8, 10, 12 hours a day cold calling from a rotary phone anymore.
No, they're out, networking, selling, handling their business, working from a coffee shop, whatever is, convenient for them and their family for that day. But even myself, as I sold my building, I'm from Buffalo originally, and I'm in Rochester. My daughter lives there. Her mom lives in Fairport, so I'm debating what my future is going to be as far as relocating back to Buffalo or staying in Rochester. But even myself, and we have these products. I'm going to look to probably build a 10-unit apartment building as part of my retirement. So, and we have that. We have lenders that do ground up construction. A lot of them. There's all different types of commercial financing that are out there. We have fix and flip products. We have, I was on the phone with the client actually who's closing on a house in Memphis. I have investors in Tennessee. Paying off a fix and flip loan that we did for him, doing a DSCR loan. Now it's a, functioning Airbnb. Gentlemen's, buying properties everywhere. So it's, it's I like it. It's a good product mix, and I feel, a loan officer, it separates the men from the boys. You kind of in the NFL. Well, there's a skill to putting a deal together. Everybody's out there, Rocket Mortgage. Oh, we're Rocket. We're this. We're that. We're trying to, they're the big company. They can throw all their money around and spend all their advertising. But you're really getting a good technician to put that loan together and to really know what's going on. No, for them it's a numbers game. Hey, we're gonna throw a bunch of darts at a board and see what sticks. That's not my business model, and most real estate professionals that I work with, it's not their business model either.
It's a good one for them, but it's most of the people that I talk to, we appreciate the local connection, the local support, the ability to get a hold of somebody. We've had plenty of 9 p.m., 9:30 conversations going, what is this person doing? Why? What in the world could possibly be going on that we're still not closed on this property?
Mm-hmm.
And sometimes we have to tag team together to work with our clients to be able to get the information needed to the appropriate place, to the right place, to make sure things are being followed up on.
Sure. An agent I work with in Rochester, it was her listing, and they were past closing, and it was coming off a winter. And this listing was one of the listings that had been around for a little while. They do exist. Not everything. There's multiple offers. And the deal was dying. It was at a local bank. They had it for 2 months. Couldn't figure out how to close this loan. We did it in 13 days.
That's amazing.
And that's just we have the options. The attorneys had title work done because this client's been lingering for a while. They're appreciative, and they were like, "Wow, you did it in 13 days." I'm like, "Oh, we're good. We have the products. We have the options. Our average start to finish time is 21 days. So, I tell people we're the best kept secret in the mortgage business. We're not out there. We're not flashy. We're not spending all kinds of money like the big companies are.
You say you're not flashy, and you're wearing almost a master's green jacket today.
Well, I like suit coats.
But I do too.
But we're not out there, trying to attract the masses. And there's everybody gets to a point in their career where the longer you've been doing this, you can decide who you want to work with, right?
Mm-hmm.
You could as a realtor. There's certain customers you might just take a pass at. It's not a good fit of your business model or what you want. And same thing with mortgage people and real estate agents, right? There's I look at myself as being a value. To you and to your customers, I can help realtors that want to work with us, want to be loyal. I feel I can help them make more money. And I'll use that last one deal I was just telling you about, that story, that listing agent. I do handle all her buyers, but she'll make more money because she uses me.
Mm-hmm.
She didn't use me, she would have lost that listing.
Mm-hmm.
And then what? Then have a pissed off seller, have to remarket it, have to worry about the seller relisting with somebody else. Nobody wants to do that. Nobody wants to have those awkward conversations. Nobody wants to do the same job 10 times on the same house. They want to, close the transaction, and especially as the market will change. The interest rates are all over the place. They're up and down. The market is going to change where it's not going to be, easy to sell a house like it has been.
So your prediction is stability in the future?
Yeah.
I'm desperately hoping for that soon.
I think we're going to hopefully see some more stability, but who knows?
Yeah. So Sam, you had mentioned that about the building that you had owned in Rochester, and I know there's a lot of people who love to talk about getting into a property, getting into real estate, but also no one really wants to talk about the decisions to get out of a piece of real estate, or when is it right to sell a piece of property. So can you talk a little bit about that building and a little bit about the rationale and the business's decision to sell that building?
Sure. I went through some life changes, some business restructuring, and even forecasting myself. Where do I see myself staying in this area, forever? The answer is no. I'll be moving I'll be relocating from the Rochester area soon to either another city, be it Buffalo or maybe another city that might fit our needs. As my life changes, my family changes, my children grow, so we're preparing for that. Being from Buffalo originally, we miss just being local to go to Bills games and Sabres games, and Kate and I like sports very much, so don't have that in Rochester. But it was also timing, right? It just felt right. I bought the building in 2015. The business model has changed, life has changed. Even a big we used to have the Park Fest in Park Avenue. After COVID, that never came back. I mean, the world has changed, and everybody will tell you that really after COVID, things changed in life just for a lot of people. I mean, really, every business has changed since COVID. That's just the reality. I don't care what you do. Things have changed. In my building was not it was a great building. I loved it. I had a lot of heart and soul in it. It was awesome. I lost money on it. For what I bought it for and what I had into it. I over-improved it, but it wasn't a very good rental. It was an old converted house, like a lot of brick, a lot of wood. Looking at a very New York City chic loft style building, but it was a horrible rental. And as a business owner, you want to have that, especially in what we do. The days of people going to the office every day are over with. Don't need it. And from an investment standpoint, it would have made more sense if I was in that 4 to 5 unit type building. Doesn't matter how it's set up, right? A commercial building, mixed use property, but to have extra rental income coming in from the property to offset your expenses. And even as a rental, that'd be a horrible rental in the building that I own, because I thought about it. I thought about just relocating, renting the building. It was a one tenant building. And right now, for one tenant, people want small spaces, even with the studio where we're at now. We're a relatively small space. This isn't a big 5,000 square foot, 3,000 square foot space. And that's just, the world we live in now. Things are different. And working from home is so popular in every business. That's just the reality. Even looking to get employees to work for us in the process loans and that we employ. I mean, everybody wants to work from home. To be competitive as an employer, you have to have flexibility now as an employer. To people don't go to the office 5 days a week anymore. They just don't. Nobody does. But as a commercial real estate investor, I would have been better off buying a mixed use property with rental income. Even myself, I'm probably going to I'm going to buy something else. And I was telling you, it might just be I might just buy an apartment complex, a 10 unit, brand new ground up construction. We had the programs for it. I do these programs every day for investors. I'm probably going to do it for myself. Ground up 10 units or, townhouses. We do a lot of financing for builders. Doing a project in Alden right now where we're a DSCR off half the subdivision. So usually build a bunch of townhouses. I think there's like 55 townhouses. I think he's going to keep 20 for himself and sell the rest.
Yeah. Potentially to other investors as well. Because if you're going to have rentals, it's really nice when they're clustered together.
Right. And then we have products for that. And we do a lot of financing for builders, for real estate, and for construction ground up. Right now I'm doing in Seattle, believe it or not, in Washington on the West Coast. I have a builder I work with up there. We're doing ground up construction right now for 5 row houses he's building. And he's selling them. So we're doing the financing for the builder, and he's going to end up selling them off to the end consumer. But the products that we have also, we can do that and then DSCR them for the investor. So if the investor wants the ground up construction, we can fund that and then DSCR all them off. And that's been a very popular program, because a lot of people, you own real estate and
build as well.
And a lot of builders and investors, that don't want to own 10 two-families, 10 single families. They'd rather, to your point, have, one building, all new,
Mm-hmm.
a cluster of property and, one piece of land, and that's it. And that's becoming more popular than, okay, I own 5 two-families in North Buffalo. I own 3 two-families in South Buffalo. I got to run around, collect rent, worry about all these furnaces, worry about all the electric. Oh, and by the way, the house is 100 years old too. So
I'm actually going to be doing another segment with a friend of mine, Riley, who's also an investor and a contractor, and his portfolio is very centralized. All of his units are basically on the same block, and it's phenomenal. But then you see other portfolios, and it's like, oh well, we've got 4 units in Salamanca, a single family in Hamburg, 10 in the city, 5 south, 4 east, 1 north,
don't
and
make
then
money.
in Lockport. And you just because it looks good on paper doesn't necessarily mean it's going to be good from a long-term ownership standpoint.
No, right? Yeah. Well, good friend. I just had that conversation last night with a friend of mine in Rochester. He owns everything in 14623. Owns 15 houses in 14623. That's his zip code. Close
Yeah.
to U of R, close to close to U of R, close to Strong, Jack Green College Rentals, and
Pretty
that's his zip code.
Sounds like a pretty good business model.
And he has money to buy these, millions of dollars these guys have in the bank. They can buy a house in 14623 or another zip code. They have plenty of money to buy what they want to buy when they want to buy it, but that's just their business model.
It's just about finding that value and chasing value. That's the Fido ball.
Yep.
That one I'm actually excited about because it's important for investors to understand, if there's a great deal on a self-storage in Medina, great. It's 50 units, cash flow's great. Who's going to do maintenance on it? Who's going to change out locks?
Mm-hmm.
How often are you going to, do you get to Medina often? Is it a place that's on your way? For someone like you, it might not be too bad. You can stop in, check on it, commuting, going back and forth between Buffalo and Rochester.
Sure, I'm up another 90, 4 days a week usually, so 3 days a week.
But for someone like me that has to figure out where Medina is on a map, kidding, I've actually been there, but it's not a place that I go to. It's not a place,
Sure.
It's not a destination for me. It's not on my way. So going there would almost feel like it's a job. And then you get into now you hire somebody and you've got to pay them, so your overhead goes up,
Mhm.
and it just really starts to eat away at that cash flow to the point of, is this asset really worth the investment for me
Mhm.
versus someone who already has a self-storage in Medina. They live there, they love it, makes great money for them. Sounds like that would be a perfect fit within their portfolio.
Well, sure. In any business, it's not how much money do you make, it's what do you keep.
Sure.
And every business owner is very conscious of their expenses, and you need to be. And again, I don't care what you do. It's bigger is not better. Being small, being nimble, being targeted of what you want to do, and time is money for anybody. So it's got to work, and you waste time driving around if you're in one neighborhood here, then another neighborhood, and stick to an area that you're good at, and do what you're good at.
So I was having this conversation with someone earlier this week, and they said, "Oh, real estate is a great passive income source." And I spit out the coffee that I was drinking and said, "What do you mean passive income source?" Like, well, you just own a bunch of things and people send you checks. And I said, "You've never owned real estate, have you? Like, you've never been if that's your idea of a good time, then just stick your money in a REIT, collect those dividend checks, and be done with it. Because physically owning real estate is anything but passive income."
It's not. And the best investors, are the ones that are hands on. And it's kind of like some of them are I don't want to be stereotypical Italian and kind of old school Italians. They'll knock on doors to collect their rent. and they want to go inside. They want to do a walkthrough like once a month. They're very visible because that's their investment. That's the property they own. But an absentee landlord is not a good recipe because if people know that, the ones that are very hands-on and very involved, they're more successful. They have better tenants. They pay on time. And they respect the properties more because they know, oh, God, the landlord's going to come here on the first of the month and collect the rent. And, oh, by the way, when he's doing that, he's doing an inspection. He's looking to see if there's any deferred maintenance that needs to be done to the property. Because, a house isn't all about the income. It's an asset. It's like putting money in, especially now, like putting money in the bank, right? I mean, you're building equity in that property. That asset's appreciating, hopefully, but you have to maintain it. And there's a lot of landlords that don't. And those landlords end up having trouble. They have deferred maintenance issues that pile up. And then they have cash flow issues because if they're not on top of their maintenance, and eventually it's got to get fixed and repaired. I mean, everything,
You alluded to it earlier. A lot of our buildings are old. I think all of the units I have, almost all those buildings are approaching 100 years old.
I know. We talked about you're selling one of them. One of your tenants possibly, but that was old, and now you're fixing it up and putting it on the open market.
Jesus.
So
the foundation alone, which wasn't as bad as we thought when we were selling it, $125,000 to fix those two walls. I was like,
"Did you fix them?"
They're getting started at the end of the month because thankfully the deal didn't go through because somebody would walk in, an inspector, move something, and go, "Oh no. No, that's not going to work." Like there was part of the wall that it was staying together, but mostly by habit. So it was
time to fix it.
Yeah, time to fix it. But it was just one of those. We knew that the foundation wasn't perfect, but it's 100 years old. You get what you get. But even the little things like fixing screens or changing light bulbs, making sure hallway lights work, that your tenants can exit, get in and out of their apartments safely, that the hallways are clear. These are little tiny things, but they're huge in the event that there's an issue or hopefully someday soon we're going to have some nicer weather. People are going to want to open their windows.
Sure, they have screens.
A screen is a lot easier to fix than a fly infestation.
Sure, absolutely.
So it's the little things, the preventative maintenance things, the addressing the running toilet before you get hit with a $3,000 water bill. The little things really start to stack up if you don't stay on top of them.
Well, that's just the most successful investors that I've worked with and have seen are your contractors, your tradesmen that are handy, know how to do things, and they're on top of their properties. The ones that aren't successful are the ones that they can have a manager do everything, not be visible, not be around. You totally remove them, just collect checks. Doesn't happen. It's not, it's not a long-term successful business plan.
You never make you never make your money.
No, because I mean, to make, that's a whole lot of risk to make, $500 a month off a house. You need to be making, hopefully you have a better cash flow property, but, people want nice. I mean, the average rent is almost $2,000 a month now in both cities, in Rochester and Buffalo.
It's just absolutely wild.
But the customer's not going to want to have a dated apartment for $1,500, $2,000 a month. I have a client offer going in, I think, this weekend at the house doesn't sell. There's a big 4-unit he's looking at in Hamburg, and this gentleman's in the trades. He's like, I need to be able to remodel each of these apartments and we just did the numbers yesterday. It's fresh in my head. It's a $600,000 purchase price, but he needs to get $6,000 a month in rent out of the building for it to make sense for him. So he needs to know that he needs to be able to buy this property, take out a $480,000 mortgage, tax insurance probably about $1,000 a month alone. But he goes, I need to make $2,000 a month off this. I'm not making $2,000 a month. It's not worth my time.
Sure.
To make $500 or $600 a month, I'll just go out and do what I do and do one more job for a customer that I'm selling to. And same thing with you, obviously. I mean,
Sure.
Go sell another house. Go sell them the mortgage. It doesn't make money. Why do it? Why take the risk?
If there's someone out there that's a small business owner and they're thinking about purchasing a space, purchasing their own space, what are some of the pros and cons for that individual business owners of renting a space versus renting a space versus buying a space or buying a building?
I can use some of my own experiences. The building's got to make you money, right? And for everybody that owns a business, your time is money, right? You're making money for what your craft is that you're doing, right? Whatever your, real estate, mortgage, nail salon, therapist, whatever. That's how you make your money. You're making your money on providing your service to customers, right? So, renting is nice because you write a check every month. You don't have to deal with it.
Mm-hmm.
That's it. You're done. You don't have to deal with a water backup. You don't have to deal with, the weather. I mean, again, owning another, and I felt like that when I owned my property myself. I own 2 houses. So I have to got to get the gutters clean and windows clean at my house every year. And I get the gutters clean and windows clean at the building. And just the list goes on of just preventative maintenance. And any property you own, things happen.
Mm-hmm.
So you have to be prepared for when things happen. I don't care what you own or where it is. Things are going to break. Furnaces will go. Toilets will overflow. Things just happen. So you don't have to worry about those unforeseen expenses that pop up. Now, if it's part of your financial plan to have the business pay the debt, that's always a good thing, to build equity into a commercial asset. But you have to see how that helps you financially with your accountants, because on a commercial property, you have to depreciate it. That depreciation will certainly help you on your tax position. But, is it worth the money you're going to make off that property versus as renting? I mean, I know a lot of law firms I work with, attorneys who do very, very well. They could afford their own property. A lot of them just rent.
Mm-hmm.
A lot of them just rent a nice space somewhere because they're going to make more money being lawyers and doing what they do to make money than having to worry about being a landlord and dealing with somebody not paying the rent. And, there's pros and cons to everything.
And one of the other, I would say, pros of owning your own space that we haven't talked about is control. You have the ability to create the space that you want to inside.
Sure.
So if you're a nail salon or a hair salon and you want to give your customers a certain experience, you have the ability to transform that space into what fits your value, what fits your brand. Whereas in a rental space, you may not be able to make the type of changes that you want to see. And I was working with a hair salon in Tennessee, and they were renting. It was a beautiful old building, but their business had grown to the point, and they had refined it so well. They had issues with the power. They had issues with water. They had issues just with the structural stability of the house at a certain point. Parking was an absolute nightmare during peak times. So the space was good, but they had outgrown it with their business model, and that they didn't have the ability to take out walls and create a bigger cutting room or a bigger area to. They did a lot of hair dyeing. Probably not something you've got a lot of experience with.
No.
I'm looking around the room going, it was probably not the best example.
No, whatever.
But they did a lot of very different salon treatments, a lot of aesthetics and skincare.
Sure.
And it didn't always work really well in the space that they were in. So the long-term set them on the path for the long term to be able to buy their own space that fit with what they needed.
Sure.
And that there might be other salons or barbers or nail shops or dentists or doctors or whomever. They're in a similar position where their practice has grown to the point that they can't play with their scheduling anymore. It just doesn't work. They need that bigger space.
It depends on the business and the needs.
You're sure? And
You own it, you control it. You don't own it, you're a tenant. Somebody else make those decisions for you.
that's something that Tyler and I were talking about earlier as well. Of it'd be great to do more permanent things, but it's a rental.
Right. At the end of the day, it's rental. But, that's where, even for any business, controlling your expenses.
Mm-hmm.
So, I pay for my Buffalo office $1,500 a month in rent. It's beautiful. Nice,
It's a great building.
Nice office, Elko Square building.
Right there on the ground floor.
Yeah, it's perfect. But it's not excessive. It's just, again, we do more networking there
Mm-hmm.
with business partners, and like I said, more of a touchdown area. Where, folks want to come in, meet,
Mm-hmm.
see each other face to face, go over stuff.
But
But I can't buy a building and have a mortgage that cheap.
not downtown.
So
Actually, there's been a Burger King that's been closed for about 45 years.
Right.
You might be able to get that building
yeah,
cheap, but you have to decide, is that the best client facing focus of your efforts?
well, yeah, and I just learned over the years. I've done different things in my life. I've always been in the mortgage business, but I've always done other things. And you're better off figuring out what you're good at as a person, as a business owner, and just do that really, really well. Don't spread yourself so thin and want to be, jack of all trades, master of none. Just, pick the one thing that you're doing and just excel at it. Be the best at it. Spend your time there. Be the best you can be in your line of work. And
I'm working on that. It's a good philosophy.
Well, it's just, I think it's better to harness and channel your energy into one task.
There's still bills that got to get paid.
I know.
Still got to sell a $200,000 house every now and then.
I know. Listen, we do them all. We do the small ones, the big ones.
Yep.
Houses, commercial buildings, apartment. We do it all, which is nice. It's no day's the same. So it's just
Every deal is different. Every client situation is different. And that's what I really love about the commercial world, is that there's a couple of guide rails that do not exceed these, or you go to prison. But everything in the middle, all right, well, let's chart the path that works best for all the parties involved.
Yep.
Let's figure out what that path looks like. Versus residential, those guidelines are pretty narrow in terms of what you have to do, what you need to have prepared.
Sure. And as a broker, we just have expanded guidelines at the end of the day. Which is nice. I tell people, I meet a new customer. I go through my spiel. They do their credit, figure out their income, their assets, what their big picture is. But really, as a good mortgage person, you're putting a puzzle together.
Mm-hmm.
You take all the facts that the client gives you. Their credit's their credit, their job's their job. Wherever they have for assets, that's what they have. And we're, as brokers, trying to just put the puzzle together. And a big part of business has been self-employed people, even to buy owner-occupied residences. We have great bank statement programs, which is I have another gentleman at Paver in Rochester. I'm doing a bank statement program for him. His taxes aren't the best in the world, but the guy's got tremendous cash flow. So we're doing an owner-occupied private residence mortgage for him using 12-month bank statements. Guy is ecstatic.
That's a pretty hard loan to get underwritten in a traditional model.
Yeah. Is the rate going to be perfect? No. Rate might be 8 or 9%, but we get the guy a loan. Better than renting.
This is true. And renting until things are absolutely perfect.
Yep.
And in an environment that continues to change, perfect is an illusion.
Mm-hmm. It absolutely is, yeah. And of course, the realtor's happy because it's a client they wouldn't have had getting done, because most places can't do those types of programs. So, just I tell agents, look at your book of business and how many clients are perfect. How many clients have that 20% down, great credit, steady job? Very few.
Or no student debt, no car payment.
Sure.
I've yet to find one, but I hear they're out there.
They're out there, but they're far and few in between. And if you're just waiting as a mortgage person or as a realtor to make your money off that perfect customer, you're not going to make very much money, because If I didn't have the products that I had, I wouldn't sell the volume that I sell in mortgages.
So I know in residential real estate, the golden rule, or the perfect world, would be an 80-20 scenario where a person has 20% down in cash readily available to be able to put down on a house. Are there any golden ratios or golden rules for someone that's in looking to get into commercial real estate, whether a small business or just an investor?
Commercial would be 20% down at least.
Okay.
Depending on the bank and the credit union and the structure of the deal, it might be 30, but at least I would plan on 20%. Residential, we can get people in for 3% down.
Sure.
We have 5% down product with no mortgage insurance, 5% down products, no tax escrows. I mean, so we definitely have expanded guidelines on the products we offer. It just depends what's important to the customer.
And if somebody had the equity in their existing single-family residential, do you have products that would allow them to sort of bridge a commercial and residential together?
Yep. And again, everybody talks about these cash guarantees, and those are just fancy names for doing a bridge loan, which we do all the time. And we have a very large credit union that I work with. I do all my home equities with. So we can take, cash. One client, I'm refinancing their house now. They're buying a commercial building and a pizzeria. But we just do a home equity loan. Even people that are going non-contingent in today's day and age. You own your house, you have $100,000 on it, it's worth $400,000. We could tap that equity out of your house for $150,000. You got to qualify carrying both mortgages. Use that $150 to buy the next house. So it's just, that's all these cash guarantees are.
So there's a lot more creativity out there for people that have the equity either in their business or in existing residential.
Yep. That's the most important part of the mortgage is their credit, their income, and their assets. So if they've got all that, then they're usually pretty good.
So thank you, Sam, for joining me for another episode of Java with Josh. We'll link all of your information. This goes out mostly via Instagram and YouTube.
Oh, great.
So we'll provide some cross links.
Awesome.
But if you're a small business owner or somebody that's just looking to get into real estate, Sam DiPiano with Haus Capital, offices here in Buffalo and Rochester. Feel free to give him a call, one of his agents a call, and they'd be happy to work with you on what your mortgage needs are.
Thanks for having me, Josh.